Awesome. Okay, so everyone, welcome to this free trading room session. And in this particular session, I'll be talking about using multi-time frame squeezes to make trade decisions. And what you see in front of you is Costco. If you've been a part of the options room for the open house, you may have seen me talk about this setup. And the reason I want to talk about it in this particular free room session, as the subject is multi-time frame squeezes. Ironically, a setup appeared. We took the and we can discuss how we expect it to work out. So, first off, why multi-time frame squeezes? In my opinion, you need at least I don't know. I use three time frames to place a trade, but you could use two if you wish. That also works as well. Now, let's talk about this. So, the reason multi-time frames alignment. So let's talk about that for a minute. So in this case, for a swing trade type of alignment, you could use this, and I'll show you how you use it from big time frames to lower time frames. I've used it for I do use it actually for overnight swing trades. I do it for intraday future trades, and obviously swing trades. So I'm gonna get my pen for y'all so I can draw this out and hopefully make this all make sense. All right, so first off, let's talk about a squeeze. What is a squeeze? A squeeze is a compression of, we'll say, volatility and price, right? It's building up energy and it's basically wanting to expand in one direction or the other, right? It's a compression of price. If you have been a breakout trader, things of that nature, me personally, before I learned about the squeeze, I was trained by from my trade for to trade breakouts. Basically, it's a lot of like high bases, ascending, descending, pullbacks, things like that. But once I learned about the squeeze, and then I was like, wait a minute, there's a way to identify these setups and get in before the breakout even occurs. So I was like, well, that's pretty cool. And since then, I've been trading squeeze. So let's talk about that. So that's what the squeeze is. It's a compression of volatility and price, looking for the expansion. Now, how do we read the squeeze? I want to go ahead and do a quick little recap on the squeeze if you're unaware of how to utilize this tool. I do have the Squeeze Pro. There's also just the regular squeeze, which is free on most platforms, is noted as the TTM squeeze. So I'm actually, you know what? I think I have it right here. Got the original. All right. Actually, I'll use this too here. So the squeeze, how exactly does it work? Basically, if you're using the free version, if there's red dots, it's in a squeeze. If the momentum is light blue, then it is indicating bullish momentum. And if it was to show a squeeze and then show red, similar like it did here, that'd be a bearish squeeze, looking for price to go lower. So basically, if there is a squeeze and momentum is going light blue, you look for the momentum to continue to the upside. Now, right here, in this case that we're currently looking at is Costco, like I mentioned, we have multiple squeezes all over the place. There is squeezes from the monthly all the way down to the weekly. It looks like I have the monthly on there twice. That should probably just have to be taken off there. But every single time frame has a squeeze. And then every single time frame is mainly bullish except for the 3 day, which is yellow, which means momentum is just shifting. So, like yesterday in the options room, right, we entered the squeeze. And what is the squeeze setup? You enter at the 21 EMA, which it was at on every single time frame. And then you're looking for that squeeze to push up. And then the high compression squeeze has fired bullishly to a mid compression squeeze. And then we do have a mid compression weekly squeeze that is now obviously pushing up. So, ideally, what you can do is you when there is a squeeze, you just enter at the 21 EMA. But now let's say this didn't have a squeeze, right? And or actually say we never even looked at the squeeze. But if this squeeze larger time frame is going higher, then what you would do is on a lower time frame look to enter on a squeeze here to go higher. Now I feel like this one, now that I'm talking through this, may not be the best example because there is a multi-time frame squeezes. They're all pushing higher and it's all working there. But let me zoom back. Let's find a different ticker that's in a squeeze. let me pull up my other squeezes. What's in a squeeze at the entry zone? Scroll on up. We got Adobe's in one. Okay. So here is an example of another multi-time frame squeeze. This isn't the cleanest example really because the weekly time frame, the EMAs aren't stacked positive, but what you can do here is with the squeezes. You see how the weekly squeeze is going bullish? Okay. Now, look, you see how it's light blue? All right. We have a bullish squeeze building momentum to the upside. Now here we have a squeeze that is dark blue. It's near the 21 EMA and potentially setting up to potentially go higher. All right, cool. Let's take it one step further. This is the 195-minute chart, basically meaning every two candles is 1 day's worth of trading. And you see today, or just now, actually, for this time frame, because it did just past 12 Central, that we do have light blue. So what does this indicate? Multi-time frame squeezes are showing that if this 195-minute squeeze can get firing, and by firing, it goes green, similarly like I did here, and push higher. If this can get pushing higher, then this squeeze right here would, in fact, turn light blue and push higher. And then, and that's in the context of the larger time frame, which would be another squeeze going higher. In apps, I see you asking about, we see Duncan gave you how to set it up. Cool. There you go. Um, I would suggest adding moving averages in the scan so you can find tickers at the entry point. That's just personally how I do it. Now let's check out Etsy. Is this making sense as far as how I'm talking about these multi-time frame squeezes? And we could also narrow it into intraday if that will help you. Going through here real quick. Oh, it is like dominoes falling. Yeah, it's pretty similar. Like they're either, yeah, that's a good way to say it. It's like the bigger time frame goes pushes the lower time frames, and the larger time frame goes. I kind of get behind that. That's a very good way to um, say it. And I will also like to say, Otis, this is the very first time I figured out how to work this button right there. Cool. But yes, you're absolutely right. Okay. But let's look for other examples. So if we're going to lose, let's talk about intraday. The reason I want to talk about intraday is because it's a little bit. I'll be able to show y'all more repetitions really. So let's just pretend we're looking at, say we're wanting to trade ES features, right? And I have 15-minute, 30-minute, and I'm going to turn this one down to an hour. Okay. To zoom in here. Sorry about the little delay there. Yeah, so the way I use this from a day trading perspective. Cool. Got that there. We'll zoom in here on the 15-minute. And here is hourly. Okay. So hourly momentum is shifting up. Okay, cool. Now what about over here on the 30-minute? And all you have to really do is think about your time frame. So if we were to look at here at the 15 minutes, say you wanted to play the 15-minute squeeze. So ideally, right here, when price came down to the 21 EMA while we're in a squeeze, at the same time, the larger time frame squeeze was just also turning bullish. So as you are 2 bars into the blue, you're several bars blue into the 15-minute. So now you have context of the larger time frame that is going to go potentially push higher. And fire to the upside. You also have your entry point. The squeeze is potentially going to fire to the upside on the 50 minute, and as it is firing right now, in the context of momentum is just bringing back in here on the 1 minute, especially when we're down what 3/4% overnight, so that will make this cause a little wonky. So on this big flush lower, it did make this go, whoop, and now it's just bringing itself back. But when you have your 30-minute and then your 15-minute time frame and alignment, and by definition of a squeeze, you're going from the 21 EMA to potentially to a minimum of the second ATR, which is right where we're at now. So that's a pretty good move. Like you would want to lock up profits, try your stops, and so on and so forth in the context of the larger time frame. Okay, so checking that real fast. All right. Any specific questions? That's really, in my opinion, as simple as it is. We could look at a few other examples here. Like, so here are some other ones in a squeeze. AMD supposedly is in a squeeze. All right. So here is a good example on what you could do on AMD as it's setting up a potential squeeze play. So what I do like about AMD is if we look over here on the weekly time frame, it does have a weekly squeeze firing. So we'll do this as one more example as a top-down analysis for the squeeze. So we have a weekly squeeze that is firing. It has broken above the key moving averages and it is pulling back to the weekly 8 EMA. Great. This one is in a bullish setup. Now over here, here's a kicker. We do have a bearish squeeze, right? A bearish squeeze meaning it is going down. Now we need to see it shift. So how can we use this to analyze? We are below the 21 EMA. The definition of playing a squeeze is within +1 or -1. I guess there's a +1, -1 of an ATR of the 21. There's a T in there. ATR of the 21 EMA. So if that is the case, what I would look to see here, and I'm actually going to watch for it now that I'm looking at this. So bullish squeeze here, we do have a negative, so we're waiting. We got to be patient. We're watching. We're stalking. We're listening. And now here is the 195-minute chart that is starting to move up. So how would I look at this to play out, and how can I anticipate it to play out? I would want to see this 195-minute squeeze start to turn bullish. And if that 195-minute squeeze starts to turn bullish, what is going to happen? This bullish squeeze, or sorry, this bearish squeeze at a minimum should start to print yellow bars like this, while it will have black dots, right? And then what will eventually happen is you'll start to get your blue histogram. And then if it's in a squeeze and it's at the 21 EMA, you have a perfect alignment on time frames to play a breakout to the upwards or to the upside on a squeeze. So, like I said, bullish momentum here. This will shift this momentum in the context of the weekly squeeze going higher. All right, so that's one example. And now, while I have y'all here, I want to go over one example on how we did the Costco part. Does it matter if the blue bars have corresponding green dots or red dots? Okay. Red dots indicates that it is a squeeze, CG. And then soaring eagle, no, it is not a problem. Because a squeeze could fire for a very long time. But the average is 8 to 10 bars, but it could actually just keep on going depending on how long it could go for. Yeah, you're welcome. So I want to show you how you can continue to do this for great risk reward trades. And like I said, most of y'all that are here probably know what I'm about to talk about. So we had the multi-time frame squeeze, right? Just a quick recap on this setup is we have a bullish squeeze that is pushing higher. We have the high compression squeeze that is today triggering a high or a bullish squeeze to the upside. And then we also have a 195-minute squeeze that was a mid compression yesterday and is firing to the upside on a low compression squeeze. So how did we structure this? We actually threw out a out of the money butterfly, and we got in for $4, right? So for one position, you're risking $400 for a max profit of roughly 2,500. Now we're going to get max profit, probably not, but the goal here is you could probably get 5x, 3x, 2x, depending. I'm just going to hold on up until we get to about 540. So that squeeze started a fire, right? We got in yesterday for $4 and we locked up half of the position for $8 a day. See, for right now, it's over $8. So we got 100% return. So if you got at least two positions, it's basically a free trade now. So if we got paid $4, or sorry, we paid $4 for one, we closed half at $8. That means we locked in our profit and now we're just holding on. This trade is now free. So now we have a free trade looking for potentially $2,500 if we nail that entry. That's a solid risk reward. Max loss 400, max profit 25. Will we get it? Probably not, but we can still get a really large return based off of it. But that was all based off of the intraday, or not the intraday, but the multi-squeeze time frame. So this happens over and over. And if the market does start to turn around like it looks like it's trying to, I think this is going to be a lot more common like it used to be a few years ago. It's a very solid strategy in my opinion. The last one was an hourly options trader. If you're talking about this setup right here, or not this one, but this one. This was hourly. See, we're up at the second ATR and we're starting to stall. So that's where you would want to take out profits. Okay, then look to see what happens. And you just hold on for the move until you at least start to get two dark blue bars, depending on if you're day trading, swing trading, things like that. Cool. Anything else I can help you out with? To me personally, I think it's a pretty simple setup and strategy in my opinion. But is there any part of this that is not making sense? And options trader, I see you're asking about Amazon. Let me ask you this: are you in Amazon? Okay. And so, what was your plan when you got in Amazon? Usually, when someone's asking me, your title is options trader. So, what was your plan when you got into Amazon? Usually, when people ask about Amazon, they're wanting confirmation in something that they feel like they may potentially be taking heat on. But we can see if there's a multi time frame squeeze on it. Let's take a look. So there is a bullish squeeze. It does have earnings coming up. There is a weekly squeeze that is trying to fire. If you're unaware, it's simpler. We do offer these dots. This is early in indicator indicating that the squeeze potentially may fire here relatively pretty quickly. And that being said, there is a bullish squeeze going here. I don't like how it is kind of underperforming the rest of the market. Amazon does not look like the rest of the market does. But if you're wanting to talk about context of squeezes, there is a bullish squeeze going up. There is a daily squeeze and a 195-minute squeeze. But it does have a lot of headway in front of it. I personally don't think this is the greatest squeeze setup, but a multi-time frame squeeze alignment, that is there. All right. What's going on, Otis? So your question, you like my trading style? Well, thank you very much, Otis. I tell I already like you. But as far as mastery, that type of trading, I trade in the small account mastery with John Carter, and where we set up these type of trades. Squeeze is an excellent trading strategy for a small account, but if you have a large account, the only difference is easy position size much larger. Um, but I am in the small account mastery is the main place where you can find me. I always see if there's any other multi-time frame squeezes going on. Footlocker. You're welcome, Otis. Footlocker. Look at that. But I don't like how it's below the 50. So not all squeezes are created equal. Let's go ahead and scan. We'll run a scan real quick of some potential squeezes. So this is my low compression squeeze at the entry point. Let's check that out. Netflix. Really, Netflix? I can't say I expected them to be on there. Workday, Dash. All right, let's check that out. I got some work to do though. What does the indicator name what shows the squeeze and the bars on the chart? Okay, so that like this right here, this is early in signal. So just to give an example of what this is, that is called the early in and out signals. So if we were to look at it from right here, so you can see how there's a squeeze, right? Remember, the squeeze is nothing more than taking entry at the 21 EMA and then looking for a price to expand in the direction of the squeeze to potentially the second or third ATR. But with the early in signals, like right here, when you have a mid compression squeeze, the early in signals color all the bars green. And when there's a low compression squeeze, it just gives you dots. So right here, you can see that there is a low and high compression squeeze right here. You get enter at the 21 EMA, and then you just look for that expansion, right? Boom, that's your move. You take your profit and you're done. As you see how it did start to move higher, and actually, so right here, we turn blue, entry point, squeeze fires, bam, you take your profits up here. Or as you can notice right here, how the candles turn dark blue, that's your early out signal, and that's telling you, okay, the move may have just petered out and you get out there. But is the early in and out signal. Max, when we do another example similar to AMD, where the squeezes momentums in the three time frames are not aligned, how would I analyze it? Yeah, for sure. So where they're not in alignment, well, we'll have to find a ticker that is not in alignment. I do it a lot with the ES. This is how I make a lot of my plan of attack little videos overnight when I was doing them. So I'm mosey on back. So we could look for some things that are not quite in alignment. The market's been kind of choppy, so it might be a little bit more difficult to do here. I'll erase this. Might be better off just looking at tickers. Hold on, let's find one. Do you have one in mind, Max? You're welcome, options trader. Let's see, hog is in a squeeze. But in a nutshell, what you're doing is you're looking for the lower time frame to shift to fire the larger time frame, but for everything to go in the context of the larger time frame. Okay, so hog might be an example. Like I do not like this setup, but maybe it could give us an example. Okay, let's look at this here. This one is not my favorite one, but if you wanted to do, we'll basically say a support resistance play. We are starting to get early out signals on the weekly time frame. There is blue histogram on the squeeze right here, and then looking for this to potentially push up. But there, it's not really. This is really just a bad example because in a squeeze context, this is more of like a bear squeeze. What you would want to see is this light blue right here shift down and turn red, and then this starts to all turn red. And why do you want to see that? Really, because your moving averages right here are stacked negative. There is a weekly squeeze firing to the downside. So actually, maybe this is a good example. It's just on the opposite direction. So we're in a weekly squeeze firing down, right? Boom. Now this is currently going up, and this is currently going up. But what we want to see is, so we want to go in the context of the larger time frame, right? Weekly time frames going down. All right, so how do we get in alignment with going down? We want to see this squeeze start to turn red. Now, how would we know when it starts to turn red? This squeeze over here will start to do this. So you'll start to see this right here. And then it looks like it will also be some, we'll just call it red dots. So as this starts to shift lower right here, that is going to trigger this setup to start to go negative, right? And then as long as you're at the 21 EMA, you would look for this to fire down in the context of the larger time frame right here to fire down. Does that make sense, Max? Yes, I would like timeframes to be like so. One way to look at this is this has been told to me that this is that I'm reading tea leaves is what this individual said. But so what's going to happen is if this does start to turn red, and you do want them in alignment. So if this does, it's at the 21 EMA, and this does start to fire down, it will shift this one to go red. If this shifts red, this yellow candle will turn red. This is just an early out signal to a short, but this candle hasn't closed yet. So me personally, I mean, if you need a short, I think it's a great looking short. I might actually write it down. Just be aware that earnings is coming up. But if this does decide to go this way, that will trigger this one to start to turn dark blue to go down, and then this will just turn red. And then if it does fire, we'll end up with a candle like we'll see next week like this. And all it is was like a flag breakdown. But yes, you do want them in alignment. Otherwise, you could get kind of chopped up. You couldn't have catch the squeeze on Netflix. This has just had earnings. Earnings, volatile events will make the squeeze not as beneficial because the squeeze is good when things are trending, but whenever things get volatile, it shakes it out. There was no way to catch it. So we have a one candle squeeze today. It did not have a squeeze yesterday. And right now, like if we were to look at this in the context of a squeeze, or I said, well, you think this is going to be a good little dip buy, right? You can see how the weekly squeeze is trying to go higher, right? We have a weekly squeeze that is above zero. By definition, a bullish squeeze is just above zero. It's above zero. It's at the weekly 21 EMA after dropping on earnings, right? It dropped on earnings, but look, support held. Great. Now the drop has put us in a squeeze. According to JC, the very individual that created the squeeze, he likes to see a squeeze be consolidating for about 5 days. But that's when it was just mid compression squeeze. You could get in a little bit earlier. Just make sure you give yourself enough time for it to play out. Me personally, if I see about three dots or so, I will go ahead and hop in. So like Netflix, I mean, this looks great. Earnings has passed. I'm certainly going to write it down, and this is how I want to look to play it. So what I'm wanting to do, so like I mentioned over here, weekly context, we're above zero. Okay, so we're leaning bullish. The moving averages do have work to do. I acknowledge that. Over here, we do have one mid compression squeeze forming. Okay, but we do have a 30-minute squeeze that is building up a slingshot. If you don't know what a slingshot is, by definition of a slingshot, is it's going to start moving up higher, and then still being a squeeze, right? And then it's slingshotting to the bullish side. So once this moves to the bullish side, that will keep it in a squeeze, but at least get us above this little gap. and that'll put us right at the 21 EMA. Great. Now I'm going to look for the squeeze to play up to the upside. And also, another thing Simpler has, we do have this, and I use it all the time. It helps you plan your trade out. Is all right, say we're in a squeeze, we're in a mid compression squeeze, right? And I want to know typically how long does that squeeze fire on the daily time frame. So if I was to come here, right, my mid compression squeeze over the last 5 years, that has been 32 of them. 19 fired long, 13 fired short, and then the average squeeze length is 7 squeezes or 7 days. So we only have day one. So we have time to wait for these, right? So we just have to wait. The average is 7. It could be longer, could be less. Just know it averages 7. Yeah, its average post squeeze move is roughly 6.9%. All right, cool. And so you also look up here, like how does that line up to our second and or third ATR? So it tells you roughly how many days it's going to fire for, how many days does it typically squeeze for, and it just really helps you plan it out. Um, and where things go. All right, what about a high compression squeeze in the last 5 years? There's been five, three has fired long, two has fired short. High compression squeezes can be very tricky, but this particular setup, I believe it's called Squeeze Stats, really help you plan out your trade. But that is really how you do it. Netflix, particularly, what I'm gonna be looking for, like I mentioned, is I'll let this squeeze for a little bit. I want to see this build up momentum to at least go dark or blue like it did here. And then if that does that, this will probably be 3 to 4 squeezes in. And if, as long as we're here by the 21 EMA, I'll go ahead and hop on that thing and ride it higher. But that's how you do it. If you find this type of stuff beneficial or you like this type of trading, by all means, come hang out with me in the small account mastery. That's where I'm at. That's where I spend most of my time. I'm in the options room as well and help you out there. Let me see. Oh, I do see a few questions on YouTube. Let me get to your questions there, Jay. So your question, Jay, is what type of capital for the SAM? What do you mean by capital? It's, if you're asking like what account size, I would say at least I say 3 to 5,000 is where you should start. But at the end of the day, it's up to you how big you position size. But I try to keep max risk on those trades about anywhere from 250 to maybe 350, $400, and then after that is up to you and how big a position size you put on. And am I still using VP for my SPX setup? Volume profile. Yes, I am, Jay. I was actually looking at it earlier this morning, looking to potentially go long on. I was waiting right here. So this is one good way to little use it. This is a whole different discussion, but it's right here at the point of control as it was oscillating here at the VWAP. And once there's a clean to go long, stop on the other side and just ride it back up. But there's that. Cool. You're welcome, Jay. Thank you for the questions. All right, everyone. That is pretty much the discussion of multi-time frame squeezes and getting them in alignment. And if I really do believe the market starts turning around like it's looking like it wants to, I think this would be a really great go-to setup. I loved doing it when the market was allowing it. But everyone have a great day, and I will catch you all on the next one. Take care.